What is going on, everybody? Sorry for the technical difficulties there. I don't know what's going on. It's been a while since I did a live stream, so might be just a little rusty. It's been a few months, but I'm back. Let's get into it. Thought I'd just do a little live stream with you guys here. I'm bored, just looking at charts. Figured I might as well just go over charts with all of you guys and show you how I break down stocks, how I look at the market, answer any of your guys' questions, and just have fun and show you the process that I go through when looking at the stocks and the market and cool tips and tricks along the way. And like I said, answer any questions that you guys might have. But I thought I'd start it off with looking at the SPY right here. Let me do one more thing real quick. Open up the Discord group. That way if anybody chats in there, I'll be sure to answer it for them. But along the way, if you guys have any questions, feel free to ask. If you're new to the channel, make sure you guys hit that subscribe button and join the Trading Learning 101 community. I love sharing what I know and giving my opinions about the market. So hopefully everyone's having so far a good December. December, when it comes down to trading psychology, I got to take my foot off the gas because I remember last December, I gave away a lot of money when I was trading, losing a lot of trades, and it took me a second to realize when you're trading in December, the psychology behind it. Now, traders, the last part of December, they start to pack it up, call it a year. We got the holidays, Hanukkah, Christmas, New Year's. Companies are calling it a year, the last month of the year. Every day, every week, we're going to lose more and more volume because traders are calling it a year. They want to spend time with the family and reflect and review of what they did in 2018 and start 2019 fresh. And that's when we get the January, February, and the March effect, when the market's just exploding and just going crazy. But lately, we've been seeing some very, very, very volatile times. All this year, we've been seeing volatility. If we go all the way back to January, this is where we started the new year of 2018. And starting right out of the gates in February 2nd, we started to pull back from 284 and we dipped all the way down to 263. And then we had a snap up right there and then a pull back down. Look at just these big red bars, these big moves we've been having. Just absolutely craziness we've been having. Let's see. I'd say right here. It sucks that I got to keep going into this to draw this. But right here. And when the market's really, really volatile like this, look at this. All these moves right here. This was all at the beginning of the year. And then we just slowly started climbing up and up and up and up. And then recently, look at all this choppiness right here. And these big, long red bars that we've had. Right here. These ovals are kind of Let's see, I'd want it to fill white and have the border be like that. Let's try that. One second, guys. I'm trying to, bear with me. I'm trying to figure this out. It's been a while. Yeah, I guess that'll do. But just big, big volatility. But anyways, you get the point. We've had these big volatility in the SPY right here. And when we get volatility like this, it's good to go and play the inverse ETFs. Take advantage of those. And this is the TVIX right here. And we could go all the way back. This is the beginning of the year right here on the TVIX. Now it wasn't at 150. The TVIX at the beginning of the year was dirt cheap. It was like at $7 a share. And it ran up to $20, $30, $40. And then it came all the way back down and they did a reverse split on it. And they started at like $45 and then it came all the way back down to like 25. And then the last couple months we've been getting big sell-offs and pullbacks and it spiked back up to $50. But look at the range on this. And when this pulled back down through the spring and the summertime, it came all the way back down to $25. And then when the market got really volatile again, and the SPY and the Dow Jones and the NASDAQ started selling off and retracing, look at this. From 25, it moves all the way up to 53, pulls back, and then shoots up to $60 even. Let me go to the intraday here. And this is the intraday here. Let's go to the 30-minute. And the SPY the SPY and the TVIX like to move very, very fast. And whenever the market gets really volatile like this, how you can tell how volatile the market is just look at the VIX. Let me pull it up. I gotta put the money sign in front of it. The money sign, VIX. So if you don't know what the VIX is, the VIX is, they call it the fear gauge, the volatility. Whenever it's above 20, the market's going to be very, very volatile. And if we zoom out on it, well, let me pull up the daily. This is the daily on the VIX. Now, once again, when we go back to the beginning of the year here, January, February, you've seen how it was hanging around the 1250 area. And then when the market started retracing, the VIX got a spike up all the way to a high of 50 and then came back down and was hanging around 15 and 20 and hitting a high of 26. And then recently it came back down to 11 and then spiked to a high of 30. So when the VIX gets above 20, that's when the market can be very volatile and you could see very crazy, crazy moves. This is what day traders want. When you're a trader in the market and you got the VIX above 20, the SPY, the NASDAQ, the Dow's retracing, having just huge, crazy sell-offs, that's when you can have the inverse ETFs like TVIX, UVXY. Just, it'll be skipping dollars as it's retracing, and it's just really crazy, and you got to compare them. when the market's retracing and going through a crash like that. So if I go back to the market strength, I got the TVIX right here. Let's type in the SPY right here. So we'll go to the 30-minute on the SPY and the 30-minute on the TVIX. And then right here we both have the dailies. So you see here, they're pretty much, I'm going to try zooming in. Okay. So I hope you guys can see this pretty well. We're looking at the right side right here. The top, I got the TVIX. The bottom, I have the SPY. So when you see the SPY here drop from 286 down to 253, you see the TVIX get a huge spike up. And then you get pops up, sell-offs down, falls down, pops up, falls down, pops up, and then the market just slowly starts grinding up and up and up and up. And the TVIX slowly but surely just decays and decays and decays and decays. And they did do a reverse split on the TVIX. It was at like $7, like I said, and they reset it at 25. So then right here, in October, we got another sell-off from 292 down to 270s. And when that happened, the TVIX spiked from 25 up to 52. And when that starts to happen, that's when you start comparing the two, and you can trade these inverse ETFs. So, and it's just another way to make money when the market's going into a correction. 3 out of 4 stocks follow the overall market. When these stocks are red on the day, there's still opportunity out there, and you could take advantage of that with the inverse ETFs. So recently with the SPY, let's do a little technical analysis on this. It looks to be in a range right now, currently in a range. You could see it keeps coming up to this green line right here, and this green line is the 100-day moving average. So I'm going to draw a line just like that. We'll make this line, we'll just draw it purple. So there's that resistance line, and it keeps coming down to this 260s level. It even came down to 259.92. So I'm going to draw another line. I'd say right there. And you can see it's just back and forth right now in this range. And this is a huge range. From 260 up to 280, that's a 20-point range right there. And we just closed Friday at the support right here. So going into Monday, I'd be looking for the futures to be gapping up and working its way back up to this top resistance line right here. If it falls below this resistance, be ready for another retracement and more selling. And then if it breaks below this line right here, I'll draw this line right here, the support line, green. There we go. A little bit messy, but if it breaks below that line, 260s is going to be the mental area for this. And if it breaks below that 260s, really we're not going to have any support. I'm going to say till 255. So 5 points lower. And then if it breaks through 255, 250s really. This thing could fall and fall and fall. Let me change this to a weekly. Yeah, you could see all year. This is the beginning of the year right here. 01/22. When it retraced and came down, it bounced right at this 50-day. And remember, this is on the weekly. So, I'll draw a support line right here. You can see it. It's wanting to try to hold this 250s level, but if it falls below that, the only thing really that's below it on the weekly is this 200-day on the weekly, and that's way down here at 234. Let me look at the monthly now. And then this is the monthly. Same thing on the monthly. The 50-day on the monthly is at this 230s level. But even on the monthly, this is going back all the way to 1999. Wow. This was the correction right here in 2008. Right here when the financial market collapsed. Dropping from 155 all the way down to 67. That's like almost 100-point drop right there in a year. And it didn't start to recover. See, when it first dropped, it was November 2007. And it started to fall down November 2007, and it didn't start trending back up till March of 2009. So they went like a year and 4 or 5 months before this started trending back up. So almost a year and a half of a bear market. And then from 2009, we've just been on a great bull run for 10 years. That's crazy, being in a bull market run like that for 10 years. It really is crazy. But let me move my face so you guys can see the chart better. That better for you guys? So let's zoom in on the VIX here. You could see right here it's clearly in a range bound, just like we plotted out on the daily here on the SPY. It's in this range. Same thing with the daily for the TVIX. And when you look at the 30-minute on the TVIX and the SPY, smack on some trend lines, some support and resistance lines. Right there. Support, support. Draw resistance, resistance there. Draw support, support there. And this is the opportunity right here. This is patience possibly paying off at its best. Comparing the two, watching the SPY pull back, bounce off this support, and while the SPY is pulling back, once it touches this resistance up here, the VIX should be bottoming at the support. And then once the SPY looks like it's starting to trend back up, then the VIX should start to trend back down. It comes down. The SPY bounces off this resistance and starts trending down, and the VIX bounces off this support, or TVIX bounces off this support and starts trending up. And then the process just repeats itself over and over and over. This has been in a range now since October 10th, and it's December 8th, so 2 months. This has been in a range. And this could continue to be in the range until the new year, and then we'll see what happens going into the new year. You know, this whole year of 2018 just really could have been a very, very healthy pullback. That's what it could be. I mean, we all don't know what's going to happen. We could be entering into a bear market, or we could be the market's just exhausted and it needed to take a break. And it was on a bull run, like I said, for 10 years. So it's taken a year breather, and then after 2018 going into 2019, we could start to see it trend slowly back up and continue in its trend higher. Or we could see it break lower. This is setting up perfect, like perfect. The end of the year is coming up here in a couple weeks, and it's in this range. And as we're approaching the end of the year, going into the new year, we're about to see if this is going to break to the bullish side or to the bearish side. This is awesome. This is a great, great setup right here. Great setup. Same thing with the VIX. It's in a range right now. Keeps coming down to the 16 level, bouncing right back up to 24. Sometimes they'll get a little crazy and bounce to a high of 28. Let's look at the 65-minute of the VIX. Yeah, I'd put it up here at like 28. 28. I'd say 25 and a half for the VIX. And then for support, 16. 16. It's got 2 levels of support. 16 and 18. So this is a multi-level range that the VIX has been in, but very volatile, very volatile. From 16 to 28, it's a 12-point move on this. And look at that, the past 3 days, this is just gapped up crazy and then fell off and then grinded up Friday. Right here at 1630, just exploded up to 22. Pulls back and then rallies into the close, and then this huge gap up to 2463. Starts to trend down, pops up, falls right back down, and then explodes up. Very, very explosive moves. Very explosive. But let's go into some stocks that we've seen pop off on Friday. UXIN. UXIN and, well, no, it wasn't UXIN. It was TNXP. Yeah, TNXP. Look at this. Just garbage. TNXP, and there was another one. Let me see. TENX. So you see TNXP here had this big gap up from 3 up to 7. Falls down to 5, spikes up to 7, sells off, then boom, they come out with a $15 million public offering. And then the other one, TENX, this one just kept going. And then they also did a public offering. I traded this on Thinkorswim. I made just a fast 170 on it. I played it right here in this area. If I go to the 1 minute, see, I had it all trend lined out and everything. But this exploded from 2 up to 328 and then just kept grinding up to 4 and then just grinded and grinded up to 470 and then pulled back. This would have been a great entry right here when it had this washout down to this mental area of $4, and then it just grinded and grinded and grinded all the way up to 490, and then it got another flush out. And if you would have watched this when it flushed out here to $4 and you were watching the level 2 and the times and sales, there was a lot of activity going on right here at 425. The bid was propped very, very good at 425. First it struggled to get above 425, and then 425 was support and it was strong. It kept coming down to it. Waves of selling was coming in on the tape, but 425 just kept holding and holding and holding, and it grinded all the way up. And then we get this flush down, and look at right where it bounced at, this 425 area. And this is why I said if you were paying attention and what happened right here, this is why it was a significant area right here. So it flushed down to this 425 area and bounces up to 450, slowly making lower highs. And you can see this descending triangle, descending wedge that it formed right here. And then you get this breakout from 425 up to a high of 515, 513. So a 70, 80 cent move right there, just by pattern recognition, just being patient, analyzing the stock on what's happening. And on Thinkorswim, I got in on this. It was like 250 shares. I got in at 438, and I rode this explosion up right here. And I sold it when it was testing this $5 area right here. And it went, popped above 5, surged to 513, and then it was just done for. And it just slowly puttered out. And then they came out with the public offering too. They came out with a $10 million public offering priced at $1.93 in the middle of the day. Look at that. Trading got halted right here at this $4 area. Halted, news pending. Got halted at it was right before 1 o'clock, I want to say. It got halted. And then it reopened with the public offering news. And just look at this sell down. Just gapping down and down. Wow. All the way down to $1.43. Look at the volume. 200,000, 192,000. 131,000. On the 3-minute candles, one 3-minute candle, almost 600,000 in volume. 250,000 in volume. People just get me out of it when there's really no point in holding on to it in this, all in this area right here. There's really no point in holding on to this at all. Because you can clearly see too, on the 3-minute, you can connect it. It did the same thing. It's made high or lower highs right here, and it kept bouncing off this $4 area. Same thing as this right here, but on the 1 minute, see how I have this pattern drawn? Right there, and it exploded to the upside. Well, on the 3 minute, it's the same thing. Very, very tight. Lower highs got tighter and tighter and tighter, and it fell to the downside. And when it came back up, it bounced off that old support, which is resistance, and then it gets halted. And then it collapsed and fell down. So people who are holding on to that don't know what they're doing. And they got burnt bad. That's how an account gets blown up right there. In a short's eyes, this is gold. This is pure gold right here. And TENX was the second one to do it. The first one to do it was UXIN. Not UXIN. Where is it at? TENX and TNXP. TNXP was the second one. You could see this had this big gap up, and UXIN was following, or TENX was following in sympathy. And right at the open here, it just failed. And right at 10:30, news halted, news pending. $5 reopens from the halt. It's down to $3.30. Comes all the way down to $3. And the other stock just followed with it. It just happened 3 hours later. Very, very, that's why you got to know what to look for and what to do when you're in the market. You just don't trade anything that moves or spikes. You got to know what's going on. And then, also, I've been just keeping an eye on DTRM because the past week, this has just been popping up, and popping up. And I think it's worth noticing. I drew a trend line on this right here. This first day right here, it pops from 40 cents all the way up to $1.08 and then fell right back down to 60 cents. And then the next day, it spiked up to a high of 86 cents and then fell right back down to 45 cents, spiked again up to 75 cents, fell down, and then spiked up again 75 cents. And it's forming this wedge right here, as you can see. So I'm going to be keeping an eye on this and see what it does with this pattern. It's forming it on the 15-minute, the 30-minute, and the 65-minute. But when you're looking at the 3-minute, I mean, you really can't see it. But you could see every day, right in the morning, spikes up, falls down throughout the day. Morning, spikes up, falls down throughout the day. Right here, it didn't do anything, but then Thursday, spikes up, falls down throughout the day. Friday, what's it do? Spikes up a little bit, falls down throughout the day. So there's a pattern that's happening over and over and over again with this stock. It likes to spike in the morning right at the market open. And then the rest of the day, it just likes to fall off and decline. So I'll be keeping an eye on DTRM because it likes to make its move literally the first 10-15 minutes of the market open. So I'm going to be keeping an eye on this pattern and how this stock performs the first 15 minutes the market opens. And I believe the flow is pretty low on DTRM. Let's see. And if you don't know what the float is, then you shouldn't really be trading. You should be learning and doing the research and learning just the bare basics of the stock market and all of that. The float on DTRM is 8.87 million. Shares outstanding is 17 million. So we got a low float stock at 8 million shares. It shows it can run if volume attacks it. Let's see how much volume it had each day. It spiked up that 25 cents. So this is the daily. The daily on this doesn't look appetizing at all. You can clearly see it's just been declining and declining and declining, decaying. That's all it's been doing. But it seems to be just keep coming on down to this 50-day here at 50 cents and bouncing up to this 100-day at 75 cents. And if it can get above the 75 cents, it's got room to run to $1, $1.15 up to this 200-day. But the volume, the first day it spiked right there, it had 4 million in volume. The second day, 1.4 million. And then just a little over 500,000 right here on Thursday. And then on Friday, 400,000 shares. So let's see, we got a little volume spike right here. Just over 500,000, and it didn't do nothing right here. But I don't know if this stock has done any reverse splits or anything. I got the splits checked, so I'm just seeing a lot of earnings. And then that's when going through the news here and seeing what the stock did. We'll go all the way back to, it won't let me go back that far. So Street Smart Edge will only let you go back pretty much 2 months in the news. But DTRM, I'm going to be watching it throughout the week just because I like the pattern that's forming on it and I want to see what it does. Alright, what else we got? And a lot of stocks literally have just been popping up and falling right back down. A lot of stocks. You could see it right here. Like going into Friday, I remember I had like 6, 7 stocks on my watch list just pre-market that were all gapping up huge and looking like they're all going to have a great day. The futures were gapping up. Everything looked good. And then as soon as the market opened, we got a very fast spike up and falls right down. And NTN is an example right here. Gaps up from 2 up to 260. And then right here at the open, hangs around this 225, rips up to 275, falls right back down. DTRM, didn't do anything. UXIN, grinded all day. Let's see. ABGR fell down all day. ADIL fell down. TNX, that was that one we just talked about. PTX. A lot of people were focused on the overall market, the indexes, the SPY, TVIX, and ASNS. This was another one. It had a great day Thursday, grinded up, and it didn't really have a gap up. And then when it opens here at 382, had a real fast spike up to 430, and then just fell down very fast. I hate ASNS. I'm not a fan of ASNS at all. You could see it just likes to grind all day. Grind. And then sell off towards the end of the day. When stocks grind like this, I hate holding them because they're so hard to hold and they just move so slow. So from 280, we get a rip up to 340s, pulls back to 3, grinds up to 340 again, and it's just repeating the process. Falls down 15 cents, moves up an extra 15 cents. And it just does that all day. And then at the end of the day, everybody dumps it. Days like this is when you'd be seeing like the bid propped. A lot of selling, you'll see a lot of selling on the tape. And when it comes down to a price area, you'll just see the bid won't lift. And that's why I always say there's somebody, there's a couple ways of saying it. There's somebody's propping the bid is a term people will use when there's buyers on the bid and the sellers can't break through the bid. Someone's propping the bid. So when someone's propping the bid, you'll see it grind slowly but surely all day. And then at the end of the day, that person who's propping the bid, they'll finally pull all their shares off the bid. And that's when you'll see this thing drop like a rock. Or they'll say soaking up the bid is another term they'll say. When someone's soaking up the bid it's just the buyer on the bid is soaking up all the selling shares. They're taking it all. And the price is not dropping lower. And that's called soaking up the bid. And here's another example of it too. We get 350s, moves up to 425, pulls back to $4 area, and then rips up to 485, pulls back, starts to look like it's going to consolidate and start moving its way back on up towards the last half of the day, and then we just get this sell-off down to 380s. But this is a good pattern, chart pattern right here. This is a good one. You can see it opens up here around this 350 area, and when it shoots up, it comes up to 425, and when it pulled back, this is what I would be looking for. When it pulled back like this, it held this mental area right here, $4. So, like I've said in previous videos, mental areas, $4, $4.25, $4.50, $4.75, $5. Every 25 cents is going to try to act as support and resistance levels. and even more when we get to whole numbers like $1, $2 on the resistance or the support side. I want to see strength if it's holding as support, and that's what happened right here. When this went to 425 and came back down, this $4 was holding up very well. I mean, it doesn't have to be $4 exactly. I'd give it an area. So like 390 to 410 would be an area of support that I would want to see hold its strength. And that's what happened. And from 4, this popped up to 425 again, and then broke up to the upside to 485. So that could have been an 85-cent move right there. And then it comes back down. And remember, when it was struggling at this 425 area right here, look at where it found support at when it fell down right here. Old resistance is now holding as support, 425. And then that's when we got this grind up to 475. Just that right there is a 50-cent move. So 1,000 shares, $4,000 investment, that's $500 right there. And it took from 12:30 to 1:30, so an hour it took for that move to happen right there. Or from 12:30 to 12:40, 10 minutes right there. Boom, boom. Just sell on the first pop. What's going on, Shirley? How are you doing today? Hopefully you're having a good weekend. We're just hanging out, looking at charts, doing technical analysis, showing you guys how I look at the market and how I look at charts. And this is ASNS, the ticker symbol. It's a pharmaceutical. And like I've said before, I'm not a really big fan of pharmaceutical stocks because pharmaceuticals are a world of their own, just like if you were to trade stocks below $1. Stocks below $1, they're a world of their own. Stocks on the OTC markets, they're a world of their own. Stocks on the NASDAQ, they're a world of their own. Each world, you're going to have to learn to trade differently. There's different ways for OTC stocks, for instance. I don't trade OTC stocks, but I've looked into it. You know, it's hard because you can't put market order in on OTC stocks. They're not listed stocks. They're crap companies that you're in AU and ABX. Those are the ticker names. I'll look those up in a second. But with OTC stocks, it's hard because you want to buy into weakness and you want to sell into strength. And if you get greedy and that stock just starts trending down, you know, it's going to be impossible for you to fill because it's all limit orders. And the market maker does it pretty much by hand. And that's why you'll see CVSI have just wicked moves up and wicked moves down. Very, very crazy stock here, CVSI. But let's see, AU. Okay. Yeah, AU looks like a good one. I've never even heard of this, but this is on the New York Stock Exchange, it looks like. I don't trade stocks on the New York Stock Exchange. I try to just stick to the NASDAQ. And it's just going back to the story I've said before of these exchanges. They're a different world of their own, and you have to trade all these differently. But it looks like AU, looking at it from a standpoint, this is a range breakout. Very nice. So this is on the 65-minute here. This is a beautiful chart. Very, very nice find, Shirley. Very nice. So it looked like we had resistance up here at 1050. Again, a mental area. Even just below that, we had resistance at 1030. A lot. And then it came down to support. Here at 9. Let's say it bottomed out here and it found support. So this is a layered range, as I would call it. Layered range plays as it's got a couple resistance lines and it's got a couple of support lines. And it's just a term I use, but this is a layered range right here from 920 up to 1030. Multiple times this could have been taken advantage of, and it finally broke out of this range right here. And what's really, really cool, when you could confirm that it's a strong breakout, when even with stock chart patterns, when stocks break out of these ranges or chart patterns, they're always going to break out, most of them, not all, but when they break out, even to the downside, you could see it right here. When it broke out, it came right back down. And what's it doing? It's confirming support. Old resistance should hold as support. And it confirmed that right here. It broke out, came down, touched support here at 1050, gaps up, all right, to 11. And then we got a little bit of selling, but then it settled out at 1050. Even this, where it topped out right here. And then from 1050s, it just started trending up all the way up to 1140. This is an awesome play right here. And you said you're still holding this? It's a lot of balls to be still holding this. It'd be hard to hold that for as much profit as it gave you. But everybody trades differently. That's what's great about the stock market. I'm going to add this to, we're in December now, but this is AU. Chart pattern range. Awesome. I want to look at this on the daily. Let's break this down to see if it's near any resistance. Alright, this is the daily. A lot of history with this one, going all the way back to 1999. Alright, so even here on the daily, you can see it was in a range. Thank you so much. A lot of people wouldn't even give me the time of day on a ticker. Yeah, especially people with big followings, it could be hard. Really hard. Because once you answer to one person with a huge following, then everybody wants to be answered. And it'd be a never-ending process. It really would. But I could see if people give recommendations and you just flip through all the recommendations and just talk about the ones that catch your eye. But let's, I really like this one. This is a great find right here. Wow. And this is another thing, you know, having multiple eyes in the market. You know, there's so many stocks out there in the stock market. It's really hard to have your eyes on everything. You know, I try to find plays like this, but I'm more of a momentum trader. I like every day I'm looking for something new to trade. Where's volume at? That's my style as a trader. But plays like this are always good to look out for too. So we get a run up here on AU up to this 1050s area. 1050s, every 50 cents, 25 cents, $1 is going to act as natural resistance. But what I want to see on the volume bars is strength. And when I say strength, when I zoom in on this breakout, you could see, I hope you guys can see it, but I want to see the buying volume, the green bars, continuing to rise higher. And I want to see the selling not increasing to make it confirm strength. So you could see, let me give you an example. Try to zoom out, find one. You'll see on the volume bars too, the volume bars like to make U shapes, just like the charts, the candlesticks on the charts. But that's why I put this simple moving average on the volume bars, and you could see how the volume bar just goes up and down like speed bumps. So we got a little bit of down right here, and at the very tail end right here, when we got this breakout, you see this simple moving average slowly starting to curve up. I'm not sure you guys can see it too well on my screen because I have my watermark in the way, and I can also see the two green bars that are right there. It's trending up. More buying is coming into this. In trading psychology, people always like to buy at the top. People always like to buy at the top. You like point and figure charts? I try to look at as many different chart types as I can. You're going old school. You're looking at point and figure charts. This is really old school right here. There you go. Just like that. That's what you're looking at. I really don't understand point and figure charts. I have the book on it, Steve Neeson's Candlestick Charts, but that looks like a middle finger right there. Looks like a hand with a middle finger. But I'll look at line charts. I'll look at bar charts, and I'll look at candlestick solid charts. That's what I like to look at. But I mainly stick to candlestick charts because I did a lot of research and studying on candlestick charts. So going back AU, let's see if we're going to have any resistance coming up. $12 possibly. Coming up to $12. I could see this $12.75. Let's see on the weekly. It's above all of its moving averages. On the monthly, it's above its moving averages. See if I switch to the monthly right here, right at this 1280 level. It couldn't get above right here and right here. So we're going to have, and you got a gapped down candle right here. And gap downs are going to act as support and resistance. So at the bottom of this gap down right here, let me zoom in. Where is it? Right here. At the bottom of this gap down, that's going to act as a resistance. And at the top of this gap down, right here at the bottom of that candle, that's going to act as resistance. But zooming back out, this is on the weekly. Yeah, we're going to run into resistance here at $11.80, $11.90, $12. I would probably say a pullback after it tries testing this almost $12, and then we'll maybe see a pullback, and maybe it'll, after it pulls back, consolidate and try testing this level again. I'm going to keep an eye on this one. This is a good one. I'm actually going to add this to... Good job, Shirley. This is going on the golden charts. AU. Thanks for that one. And on the monthly, let's see where it is on the monthly. Yeah, it's like right at that resistance, like right now. Possibly going into Monday, could see some selling. Yup, no problem. And what's the other one? ABX. Let's look at that one. You got an eye for good charts, Shirley. That's really good. How long have you been doing this? So both of these, I believe both of these two are gold. Let me bring up trade ideas. Yeah, AU's gold. Limited operates as gold mining company. It's on the New York Stock Exchange. Its float is 410 million. That's why I've never heard of it. I don't really pay attention to really high float stocks. But both of these are involved with the gold, and I know recently JNOG and JDST, gold has been very volatile this year. I know that. And it just goes to show the opportunity that's out there. You know, if you do the research and pay attention on what's going on, there's opportunities out there. I was just talking about the inverse ETFs have an opportunity, and Shirley has been taking advantage of the gold. That's the opportunity that's been out there. And it's just all about applying yourself and looking for all these opportunities. This is awesome. So when there's people out there who say you can't make money in the markets, it's full of BS, because there's always opportunity out there. You just got to look. All right, 2015. That's all right. You got almost 4 years under your belt. That's good. Keep it up. I love the stock market. Absolutely love it. ABX is the other one. So let's see this one. ABX. Now this one, higher float, 1.7 billion. And again, this is on the New York Stock Exchange. It's a gold. Okay. I gotta start looking more into gold stocks. And this is what it's all about. Just becoming more, just growing more and more and more as a trader. But look at their debt. Their debt is $5 billion and their cash is $1.7 billion. But this is the daily for ABX right here. And again, this looks to be in a it's just breaking out of a range, it looks like. Literally breaking out of a range. It's going to struggle up here at $14. But same thing. You like these range plays, Shirley? Awesome. This is cool. I've been getting more and more and more into range. When the markets start to look bearish, that's my go-to, are range plays. I don't look for breakouts. I look for range. And if a stock breaks out of a range, awesome. That's a bonus. Right there. From 1230 to 1357, it was in this range. Back and forth, back and forth. Right here, we had a fake breakout. Right there. And it just continued in this range. And now it's looking like it's starting to break out of this range. Another awesome one. ABX. I'm adding that one too to the golden charts. That's awesome. You're 2 for 2, Shirley. Sweet. Look at it on the weekly. And then let me see what this with JNUG and JDST. JNUG's breaking to the downside. Yeah, it's crazy how big the market is. It's just so much stuff to analyze, and that's why they say stick to your niche, stick to what you want to learn about and know about. You know, surely goes to show you're interested in the gold, and there's so much stuff out there to learn about the gold. There's stuff to learn. It just goes to yeah, it blows my mind, honestly, and how much stuff is available out there, and it just really blows my mind, the opportunity that's out there. I was just looking at that one, this one right here, GOLD. So I would be comparing your two stocks that you have right there with this Rheingold Res. I literally was just looking at this the other day, and look what this one, compared with your other two stocks, look what this one is doing as well. This one was just in a range as your other two. From here, I'd say from there, really. But you see, and it's just now breaking out of its range. Awesome, awesome stocks, though. I know I've complimented you on it many times, but that's just cool. Really cool. I love getting to see a good chart, if you know what I mean. It gets my blood going when I see an absolutely beautiful chart, because that's what every day trader, investor looks for. You're always in search for the most beautiful looking chart, the best looking chart when you're looking around in the market. And when you find one or see someone that's found one, it's awesome. And it just goes to show you guys, too, with the trading psychology, what other traders are looking at. I look at candlestick charts. Shirley looks at point and figure charts. So there's always other people out there looking at different stuff. So try to stick to what's most popular out there, that what everybody's looking at. That's the goal every day for traders and investors. What am I seeing that's everybody else is seeing, and putting it together? Because in a way, you all kind of want to work as a team to make the stock go up and make the stock go down. When it comes up to a resistance, everybody sells because they all see it. When it comes to a support where everybody can see it, people are going to stop selling it. Buyers are going to step in. Does it happen all the time? No. But majority of the time, it does. And that's when you hear people say it's a self-fulfilling prophecy. But gold was another one. I think I was messing around at DM is another one. I'll check that one out too. I was messing around with Thinkorswim, and Thinkorswim has a tab to where you can go through the indices, the options, what else was there? The futures, and I was just going through all of them and looking at different charts. And that's when I came across the gold one, I believe. Okay, so we got DM right here. Dominion Energy. Let's see what DM is about. And these are all a bit higher priced too. I try to stick to the stocks below $20, $10, but I'm open. If stocks have range and they can show me they can move, it's all a psychology thing. It's just like buying $2,000 worth of a stock at $20. If you could buy 200 shares, but if that stock shows it has a range of $5, $8, you can make a lot of money with that. And it, like I said, at the end of the day, it just comes down to a psychological thing. So Dominion Energy is the midstream partners. It's a natural gas. Okay. So with natural gas just having that big thing with UGAS and UGAS that's been going on. This is natural gas. So let me bring up the daily here. Okay, you see how it recently had this big sell-off right here. This all happened, though, at the beginning of the year and just fell down and fell down and fell down. And then it's just been grinding up and up and up. And then it recently... Let me see if this moves with you guys and UGAS and DGAS. So with UGAS, it's trending down and down and down and down, sideways up. Actually, I'll get a better picture of this if I go to this right here. So yours was DM and UGAS. A little bit, not too much. UGAS and DGAS. DGAS has just been getting destroyed. This thing's ugly. And I think DGAS and UGAS fell because they predicted the weather to be extremely cold this winter. So you know what's up, Shirley. Shirley Lewis. But looking at DM, it's got a lot of room to move up if it can ever get above this, I would say, $19, $20 area. Ah, I see it now. On the 65 minute, it broke out of a pattern. Right there. And this is the power of looking at multiple time frames. Right there. You see the wedge that's forming, and it got tighter and tighter and tighter and tighter. Right now it's at 154.29. It's starting to get up there, but it's still in this pattern. And if it breaks out of this pattern, it's got room to run up to 200. It shows it's got range from 133 to 170. Or no, wait, this is you guys. I'm sorry. I thought it was DM. But you guys is forming a great pattern right there. It happens. Resistance right there. Yeah, another range breakout. Right there. Just slap trend lines on all these plays. If it's got volume and it shows it can move, I'm interested. That's all it takes. Yeah, I was keeping an eye on UGAS and DGAS there for a minute. That one was a fun one to watch. Very fun to watch. But all those stocks were on the New York Stock Exchange. Do you only look for stocks on the New York Stock Exchange? Is that your exchange that you only like trading? Because like me, I only try to look for stocks on the NASDAQ. I like the NASDAQ. And you got people who only like to trade OTC stocks. And just goes to show everybody sticks to what they like. I think Ricky Gertez, who is a big YouTuber, he likes to trade ETFs. He likes to trade gold ETFs, DGAS, or what's a couple gold ETFs? JDST and JNUG is a gold ETF he likes to trade. And he likes to trade natural gas, UGAS and DGAS. So, you know, that's what he's good at. That's like what he likes to focus on. You look at everything. Yeah, I need to expand more and more as a trader because I only like to look at stocks below 20 because that's what I started with. And I've only been doing this for approaching 2 years now. So I still got a lot of room to grow and just taking it a little bit by little bit over time. But I've grown to learn if a stock has really good range, like I said, and it can move. If a stock's at $30 and it proves to me in the past and even recently, if it can move $5, $6, I'll trade it. Oh, and one more thing I wanted to talk about are pot stocks. Now, pot stocks, I've been iffy on pot stocks, but they have been starting to heat back up. They have been. But CRON and NBEV, I believe, had gap ups on Friday. Let's take a look. And fell right back down. And what I was seeing on, it was NBEV, I believe, had a great chart pattern. And here is another chart pattern right here I wanted to show you guys. Doesn't matter what price it is. I honestly don't know anything about the companies. I'm the same way. I don't look too much into the ticker. I could care less about the fundamentals really and the money situation about these companies. I just want to trade the tickers. If volume is there and if it's showing people are trading it and it's got volume and it can make me money, I'll trade it. Didn't even know it was gold till you brought it up. Yeah, I will look in though a little bit to see what the company does to maybe get an early glimpse to see if there's going to be any follow through momentum like the shippers. If DCIX explodes and starts breaking out to new highs, then I know the following of that sector is going to start running in sympathy. tops, dries, GLBS, PXS started running with the shippers. So it's always good to know and just glance to see what sector and what they do whenever a stock breaks out or makes a big move, because there could be follow through with it. A great example was on Friday when we had those two stocks, TENX and TNXP. They're both related and they were running in sympathy. First, TNXP comes out with a public offering. Literally 2 hours later, TENX came out with a $10 million offering. So, I mean, you could tell it was going to come. You just didn't know when. And for stocks to do public offerings like that in the middle of the day, rarely ever happen. I've only seen it happen once, and that was just crazy when they did that. They normally wait till after hours to do that. More fundamentals, yeah, like looking at SEC filings. I like to look at Form 4s and 10Qs to see what the money situation is of a company. A great fundamental trading DVD I thought was good was Timothy Sykes' How to Read SEC Filings. That, I'm not going to throw it out, promote it, but I thought it was a good one. I learned a lot from it. And also Tim Gertani, he's on YouTube. He's been getting more into fundamentals of stocks, and everybody knows who Tim Gertani is. He's a legend as a trader. I think he's made over $10 million now in the stock market. And there's one more thing. There's let me show you guys real quick. There's a good YouTuber who does a live stream every day before the market open, and he goes over the news of these stocks and the fundamentals, and he talks about them. Let me try to find it real quick for you guys. I think it's Behind the Bid is what it's called. If I can find it. Let me bring this over. So these are everybody who I follow. I'm always on YouTube watching other traders and learning from them. I've been really learning a lot from SMB Capital. They're a prop firm. Really, really good channel to learn from. And he's got 2 amazing books out as well. I got them in the description down below. One Good Trade and The Playbook. Must read. Yeah, right here. Behind the Bid. He's really, really, really into fundamentals, and he looks into SEC filings, and he's more of a shorter, but every morning before the market opens, he'll put out a 15-minute pre-market show. Subscribe and watch it every day before the market, and you'll get a recap of all the news headlines that are popping off for the day. I mean, why not? It's free, right? Free's good. Cameron Foss, I've heard of him before. He's got a trading DVD, I believe, out, right? It's like Foros Trader. What is it? FOUS. Yeah, okay. Yeah, he's pretty good. No, wait, it's not him. This guy right here.
What's up, guys? Cameron Foos here.
Okay. Yeah, I've only glanced at him through YouTube. I've never actually watched any of his videos, but I'll give him a subscribe and check him out later. I'm always down for discovering new channels and subscribing to new traders or traders that's been out there. But there's a couple, though, I stay away from. I mean, there's a lot of people out there that love drama, and I'm not about that. I don't want to start any drama, or I feel like there's a lot of people out there that want to focus on drama to grow bigger, to get more following, and that's with him right here. And I'll just leave that at that. I'm not a fan at all. But real quick, we'll go over Quran. I'll show you guys one more example of a pattern, and I think that's going to be it for this live stream. It's already been an hour and a half. I know if I keep going and going and going, there's going to be no one that's going to watch this. So, two examples, because I know I got one with NBEV as well. And there's a couple things on this. Drawing a trend line. I drew two trend lines on this, connecting the highs right here going down. And I was only able to do that with this high and this high. And if you follow this trend line all the way down, look at where the stock pulled back after it spiked and bounced off of right there. And it bounced a little bit right there off this trend line right there. Then I drew another trend line connecting the higher lows even lower. I connected it from here down through here to connect it through this and this right here. And then I connected a trend line making the higher lows. And you can see this is an ascending wedge. This is forming. And just like the technical analysis we went over with the gold stock of it breaking out of the wedge like that, remember what I said. When the stocks break out of these patterns, more times than none, they're going to retrace and bounce off the old resistance to confirm support, and then off she goes. And look at right here, perfect example. Broke out of the pattern, then pulled back, bounced off the old resistance, confirming support, and then shoots up from $8.50 to a high of almost $12. And then it got this pulled back right here, back down to $9.75, shoots up to $11. And then NBEV, the last one, before we leave for the day. He doesn't do much these days. I will watch. Appreciate it, Shirley. So, I had it on NBEV here on, I think it was the 35-minute. Snap. I think I deleted it. Oh well, but you could see I have a channel, a downward channel going down right here. And that's more opportunity right, right here. And it just goes to show, if you know what to look for and plot how to plot these trend lines and these patterns to look out for, there's multiple ways out there to take advantage of the market. I had something drawn. I could have sworn it was NBEV. Connecting the highs on this, and then it finally broke out. No, I'm not going to sweat it. But this was another example, and when this pot sector broke out, they all started following each other. NBEV, CRON, TLRY, IGC was following it for a second until it got delisted. But when these pot stocks all broke out, this is NBEV right here. Memorize this pattern on 30-minute, all right? NBEV. Then when I go to Quran, same thing on the 30-minute. Descending all the way down. But when these sectors start to run, they start to run with each other. And then the last one, TLRY. TLRY was like the daddy. That one, this was the one that started it all off when it went from $20 all the way up to $300. Just a wicked move right here. This move right here made a lot of people money. And you could see when it was just grinding up and up and up, how there was like little volume. And then just more and more people started noticing it, and it just got more and more and more and more popular. And it did majority of its volume right in this area when it was topping out at 300. People don't want to miss out on the green when they see something go up. Kind of like everybody who fell for the Bitcoin scam. But yeah, I said it, the Bitcoin scam. But that's going to be it for this live stream, guys. It's been an hour and a half, and it's been a while since I did this. Maybe I'll do a few more in the future. Make sure you guys hit that subscribe and like button if you haven't already. Join the Trading Learning 101 community. Hit that like button if you enjoyed this video. And until next time, everyone, be patient, stay disciplined, and study, study, study. And it was good talking with you, Shirley. Hope you guys have a good rest of the weekend. And I'm going to get going, look at more charts, and probably record another video for you guys to drop this weekend. Hope you guys enjoy the rest of your weekend, and later.